Hello everyone, this is Mayank. So today we'll discuss about a company in the chemical sector. They're also getting exposed to specialty chemical also. So we'll discuss about the company, we'll discuss the business, the fundamentals and technicals of the company. So we'll understand what kind of return we can make based on the current technical analysis for this company. So we'll discuss all these things one by one. But before I jump into the discussion part, I want to keep a disclaimer that none of the stocks discussed in the channel is a recommendation by me. It's just a opinion and my own. Other part is that if you think the video is helpful at any point in time, please don't forget to hit the like button so that it gets recommended to more and more people, because that's how the algorithm of YouTube works. It basically recommend people based on the count of likes. Now let's jump into the discussion part. So if we jump into the business first, so business was this company's 14-year-old company and this operates in the chemical sector. So primary focus for this company was active pharmaceutical intermediates. So these are different than active pharmaceutical ingredients. So if you understand this, active pharmaceutical intermediates are used as a manufacturing as a product to manufacture active pharmaceutical ingredients. These are two different things. So this company produces or manufactures intermediates which they sell to other clients which are in the business of manufacturing APIs. Companies like Loras Labs, companies like IOL Chemicals and Chemicals. So these companies are in that their customers basically. So what they do, what as I told you, they used to produce APIs, their products, and they have more than 450 pharma intermediates which are used to produce APIs for across 17 key therapeutic areas. So all the molecules what they create are used to produce APIs in the therapeutic areas only. And 88% of the revenue comes from this particular segment of the business. So as I told, this is their core business. They are slowly diversifying into specialty chemical, and that's the reason specialty chemical is a very small chunk of revenue for this company. And since they have producing molecules, so the clients what they have are mostly API manufacturers only, like Loras Labs, Cipla, few more are there. Coming back to the specialty chemicals, their only 4.87% revenue currently comes from specialty chemicals, and they deal with the personal care and agriculture sector, where they sell their specialty chemical to manufacturers of personal care and agriculture sector. But saying that they are focusing a lot on specialty chemical and they want to increase their revenue share in the specialty chemical space, and because of which for doing this they acquired a company called Gujarat Organics. So basically they didn't acquire the entire company, they acquired two manufacturing plants of that company, and they want to improve the process, improve the different cycles of that particular company to make their revenue from those two plants a bit on a higher margin. So we'll talk about that. Coming back there, around 2.5% of revenue spent on R&D as of now. Previously they used to spend around 1%, but now they're increasing their R&D spend so that more and more molecules they can release, they can launch in the upcoming years. So in the case of active pharmaceutical intermediates, their APIs target these areas: antidepressant, antiretrovirals, anticoagulants, etc. Specialty chemical sector, they acquired two plants, they told you, from Gujarat Organics, and all their plants, their own manufacturing plants, are spread only in Gujarat along three different regions of Gujarat. And Gujarat Organics also are spread in that area only. And they have specialty chemical preservatives in those two plants which they acquired from Gujarat Organics. So they acquired the plants, they are improving the process, improving the machineries and everything, so that the realization of those two plants improves, and that will impact their margin. So this is the current plan of the company. What they do of all this product manufacturing, they export to 25 countries and they sell in domestic also. So their share of revenue is very equally split between exports and a domestic sale, due to which they have more than 150 total customers, both export and domestic together. And none of these 150 customers you will say there is dependencies there on the 150 total customers. There is not any like complete dependency. So only 44.5% revenue comes from top 5 customers and only 61% comes from top 10 customers. So there are some companies which we have seen in the past where you might explore and see 80%, 85% revenue depends on top 5 on top 10 customers. So they are very much dependent on those customers. If one of them or two of them leave them, then the entire revenue drops a lot. But this is not true for this company. Their revenue is kind of balanced on their top 10 customers. Export is only 51.5%, where domestic is 42.5%. Here also they are not entirely dependent on exports, neither they are entirely dependent on domestic. So the management of the company has done very good job here, where they have not created any dependency with any customer or within any segment of the market. One more thing they have done, they have not dependent on any one particular product. So it's not like they have one product which is sold very high, and if some other company comes and they create the manufacture the same product with a lower price or similar product with a lower price, then their business will get hit. They're not doing that. They have multiple products which keeps on fluctuating their sales. Suppose the product A is done a good sale this quarter or this year, next quarter or next year some other product within their own product portfolio will start doing better than this. So the entire portfolio of the revenue, suppose 100% revenue comes from 10 products, so their top 10 list keeps on fluctuating. So they have a lot of products which can add to the revenue, and that's why their revenue is not getting impacted. That is seen in their growth of sales also, which we'll see further when we talk about fundamentals. Fundamentals, if you see 2018, 2019, 2020, 2021, they have done a very good growth from 191 crores to 38 crores to 42 crores, and then 342, almost 342 crores in 2021. Profit also from 18.48 crores to 23, 27, and now 54 crore profit they have done. So it's almost 100% profit increase from 2020 to 2021 for this company. ROC for this company is 32.7, ROE is 38.9. Very good numbers, very well done here. And if you see 50% increase in EBITDA from last year, year on year, if you see. I'm talking about 2021 December quarter. So compared to 2021 December and 2020 December, they have done a EBITDA of more than 50% increase. 14.1% margin is done from 5% in the case of specialty chemical. Previously, their plants, when they acquired the Gujarat organic plants, their profit margin only 5%, but now they have improved the process, they improved the machineries, they improved their work behind them, the entire process, and now they have improved the margin to 14.1%, which they are saying by the end of 23, financial year 23, that will increase up to 19%. So this is a very good numbers. 23% margin they have on intermediates business, which is their core business, and they want to increase their specialty chemical margin close to the intermediate business. So they are saying around 19-20% it will reach in the case of specialty chemical. This is a very important figure, sales figure. Why I am highlighting this particular, see if you see operating profit margin, very few companies are there which are increasing their operating profit margin every other year. So it's 14%, 16%, 18%. Then slight dip in March 2020, obviously because of lockdowns and everything, the cost has gone up. And then they have March 2021, they have 24%. So this operating profit margin also getting increasing, and operating profit is also getting increased from last 5 years. So these numbers are very important. It's a small company, newly listed company, but the numbers are very great, and the sector what they operate are a very growing sector, specialty chemical sector. So they are also trying to launch products which are basically used to be import before, but now they are manufacturing in local. So these things can be sold to the companies which are in the local, like in domestic market, so that they don't need to import those things from outside India. So this is a market for them already in India, and their molecules which they are developing. Capacity utilization will reach up to 90%. Right now it's less, it's around 30 to 40% of the, because of the two new manufacturing plants. They are trying to increase the utilization, and they are seeing by end of financial year 24, by the end of financial 23 to reach around 85 to 90%. And that is the optimal utilization was they want to reach. So their entire focus is the process of running a manufacturing unit, the process of selling the products, the process of realizing the money out of it. So this is what they're focusing. This company has been doing this very good. Their ROC and ROE numbers reflect how strong the management is in the case of core business, and they are trying to reflect the same thing in the case of specialty chemical also. The plan is to launch 4 to 5 new products by the end of financial year 23, and debt reduction from 136.6 crores to 73 lakhs. So this December 2021, they have paid up almost all their debt, and now they have become a debt-free company, and their debt is only 73 lakhs. So this is nothing compared to their sales. If you see their sales and is almost 341 crores, and their debt is only 73 lakhs, it's less than 1 crore. So that is insignificant, and that's why this company is a debt-free company with a very good point. They have a cash equivalent of 116 crores, both cash in bank and equivalent inventory. Total combined is more than 116 crores. So that's also overall a very good healthy position this company. The bank balance and the balance sheet is very healthy with almost zero debt, a lot of cash, and very good ROE and ROC this company has. So balance sheet is very good. So all the fundamental points ticks here. One very surprising thing here you might notice is their particular shareholding pattern. So shareholding pattern, if you see in the first hint, if you see promoter holding is only 41.05%, and FIIs has only 1.34%, and DIs is only 3.81%. So this gives an image that a lot of stock, a lot of share are there with the retail investors. But if you expand the public thing, you will see that out of 53.8%, around 33-35% with are there with the strong hands. So around 8.5% is there with Mr. Viresh Kumar Limba Bhai Chohatia. There's somebody with 8.34%, somebody with 6.92%. Similarly, up to 1.06%, a lot of people are present in the company who are strong hands. So out of 53.8, around 40% is there with these people only. Only around 13-14% is there with the retail investors. So in one hint, we don't get the real picture of the shareholding pattern, but if you expand, if you go in detail, you'll understand the retail investors are not the major participants in this company's overall shareholding pattern. So this was the business and fundamentals we discussed. About trading, we will see if there is anything on the chart to discuss or not. So here on the chart, you can see since a newly listed company listed last year around September only, we don't have a very strong kind of pattern you can see here. But since the fundamentals of the company is very strong, and we can see here one particular thing is this company is kind of taking support over here. Since the time frame is so small, we can't create a long weekly and daily charts to see this. But whatever we discuss, the fundamentals, that gives a very good image of the growth of the company. And right now, I cannot give you a target because again the graph is not sufficient. But I can give you a buying point since this company is taking a support over here. This can be a very good buying point, and this stock cannot be suggested for a swing trade. Like I'll personally not recommend for a swing trade. You can take your decision, but fundamentals of this company suggest that at this point can be buying price, and based on the company's health, whatever comes in the future, their forecast and how they achieve whatever they have forecasted, this company can be hold for long term, and this can be a multi-bagger stock also. And if you think video was helpful, then do like the video, comment your feedback and everything, and share with your friends and family, and subscribe to the channel if you're new to the channel. And thank you so much for watching. Stay happy, stay safe.